Hello everybody, this is pillartrading.com, and in today's chart of the day we are going to be going over the US dollar versus the Japanese yen, a couple of very interesting things in the works right now that could have a serious effect on our long-term shorts on the pair. Now what we are looking at here is a weekly chart, currently trading 85.45. Now you'll remember these two massive shorts, both pointing down here with targets at 81.50s and 80.50s. That was the area where we were anticipating a huge reaction from people taking profits, those long-term bears on this pair taking profit at this level. What has happened is we've had the Bank of Japan come in, intervene in the Forex markets, and this thing has seen a huge covering rally. Now, we take a look down on the daily chart, we can see it better. The size of this candle here has broken out of the short-term trend. The short-term trend was to the downside. We were moving down perfectly on the 15-minute chart, headed down towards our major target down here. So that has now broken out. The short-term trend to the downside is over. It's been washed out. What this thing has hit and what we've drawn up here is simply the first resistance area, drawing from swing highs 88.15 down to swing lows 82.87. That's given us this first initial resistance area at 85.50. So we're currently trading right up in that area. We go down to the 15-minute chart, remembering that the short-term trend is over. Now we need to look for the establishment of another short-term trend in the opposite direction, a bullish trend to the upside. Where are we going to find that? Well, the first true test on both the daily chart and the 15-minute chart is going to be the full retracement down to 84.18s if this thing turns around right now. If that doesn't happen, what we can anticipate is a short trend establishing itself and then breaking down. At that breakdown level, that's going to be your cue to enter to the long side, because if we can get above this short level, you're going to have a lot of the short-term bears in this market targeting this 86.09 level as the point where they're going to place stops. And if you can get those stops hit, we're going to have even further covering. And the only place where we can turn around in the meantime, there's so much air on this chart to the upside, the only place that we're going to be able to turn around, that's going to be our first stop, 87.95 off of those swing lows. That's going to be the first sell point. Then you're going to have the full retracement from swing highs 94.98 to swing lows 82.87. That's a long way off. So right now we are anticipating the longs continuing, but the question is from where and how do you establish that? Again, we went over it. Wait for the short to break down. Wait for a short trend to establish itself, break down. That's your cue that those bears have exited the market. This 85.51 level is no longer valid. Should that not happen, wait for a full retracement, get into the upside, anticipating this 86.16 target hitting. Now, if we break down from there, again, there's no reason to panic right now. Nothing is broken out except the short-term trend. The midterm and the long-term trend are still down on the yen. So right now there's no need to panic. Stay in those long-term trades, stay in the midterm trades, and wait to see how this thing plays out. Guys, that's the play on the pair today. If you've got any questions or comments, again, please visit the website www.pillartrading.com. We do a whole bunch of other charts, a whole bunch of other futures as well. We like to see you there over at the website. Ask questions, leave comments, and we try to get to those as soon as we can. Hopefully everyone has a good trading day, and I will see you all in the next video.